Valens Research, Uniform Financial Analytics.
PayPal is really interesting. It's ironic that we're doing PayPal and eBay obviously at the same time, since PayPal used to be owned by eBay before it got spun out in 2014. For PayPal, one of the really powerful things, one, is looking at this, right? This is a company where the as reported metrics make this company look massively less profitable than it actually is. But almost more important than that, for a company that's growing as fast as PayPal is if you looked at PayPal's asset growth, you would think that this is actually a company that's seeing slowing asset growth, right? You'd look at a company that last year grew at its slowest rate in the last 4 years, and you'd see a company that went from growing 31% to 15% to 23%, now down to 6% in 2018, and forecasted to be relatively modest in 2019. In reality, when we see through that noise and we make the uniform accounting adjustments we need to make on things like R&D investment, right, goodwill, things like excess cash versus operating cash, and all those other adjustments, what we see is in reality, PayPal isn't seeing slowing investment growth. If anything, they accelerated last year. They accelerated with strong returns. And what the market's pricing in right now, which is also so important for that, is the market's pricing in PayPal to see asset growth of around 20% a year with flat ROAs. If you looked at this asset growth number, you'd say there's no way that they're going to grow at 20% a year. They're seeing declining growth. 2 of the last 3 years, asset growth was below 20%. In reality, 2 out of the last 3 years, asset growth was basically, if you average these two, was almost 50% higher than what the market's pricing in, with returns that are remarkably stable. You'd think PayPal is an overvalued company if you're looking at the as reported metrics, when in reality, when you look at the uniform accounting metrics and you can really understand the company's profitability and really understand the company's growth strategy, you'd say, well, yes, it's expensively valued, but that doesn't mean it's overly valued. While uniform PE is at 35 times, this company can grow a lot and has robust returns. That might make sense. I might even wager that PayPal could grow faster than this, as PayPal continues to be one of the core backbones of the online cashless society.
Valens Research, the world's leading source for uniform financial analytics.